Welcome back, guys. Now I'm in a different setup today. I'll look at that at the end of the video. Today's video, we're looking at a crypto dangerous move that the buyers are making, especially in this Bitcoin shakeout. So I've got the chart of Bitcoin, which we'll go through first, and obviously look at what's going on, what the dangerous risk is, when will this be over, and what we can do to understand what this is looking like in the chart. First up, thanks to the video sponsors, Bybit. Check out the link in the video description. There is our limited special offer going on exclusively to this channel. 4 lucky winners will win half an ETH each, so the total prize pool is 2 ETH. Check it out. Use that link to enter the draw exclusively to this channel and Michael's channel, and also thanks to SwiftX. All right, guys, if you haven't liked the video and subscribed already, make sure you do that. This is the stuff we've been talking about for quite some time, and the risk looks like it is continuing as expected, as they say. So it's pretty simple stuff, but so many buyers are still getting caught out trying to dollar cost average into cryptocurrencies while Bitcoin is basically giving us a shakeout. Remember our trading range that we've been following for nearly 2 weeks now, between 28,000 and 31,000. More specifically, I'm looking at 30,700, which is where this yellow line currently sits. And if we pull this yellow line across a little further, just to give us those tops, you can see the market is just starting to fade away from those tops. And looking at the bottoms, we finally had a breakdown of those lows, but it looks like it's a shakeout on a short-term time frame. So 28,400 is the 50% level of the range from that March low. So this was that extreme capitulation on the 12th. That's the low. The high bounced up into the 16th, and then we've basically been in a trading range ever since. And the market still is not getting past the 28, and it's not getting past the 31. So far, we got a shakeout to the 28 just a couple of hours ago. So $28,003 here on Bitstamp. And it now looks like the market's coming back up to basically take back all of the losses from those previous bars here. So that was on the 6 p.m. bar, AEST time. So that bar right there is basically trying to come back and take over that. So what we want to see now for the bulls to come back and test the 31,000 is, as soon as possible, come back and get above that top right there. That top is 29,700. So if we're going to get to 29,800, I think that's a pretty good short-term level. Obviously, we're looking at an hourly chart here for the bulls to recover so that we can come back and test the 31,000. I think if we fall short of that bar right there, basically that's where the fear started in the short-term sellers, that is, the smart money that is trading the market. That's where that change of behavior came in. And if we take a look at the volume, you're going to see that the volume started to increase. So you can see it right at the bottom here, which is those gray bars. So you can see this bar right here, that's the volume increasing as it took out all of these lows, and it continued down. The good news though is that we had big volume these next couple of bars. So you had that little bounce, and then we got big volume into those that final low, which was kind of the shakeout on our 50% level, which is very critical. So 28,400. The market has bounced away from that. We are getting a little bit of a drop in volume now, but that's to be expected after such a big drop. So it went all the way down to 28.5. Now we're back to 29.5. And I dare say if we can just hold above 29.1, 29,000, form that higher low, that's what we want to see in order for the market to get back and try and recover the $29,800 level for the bulls, come back and test that $31,000 level, which will then sit us back into this trading range, looking at least more equal than it currently is, which is more bearish. You can see that's a clear downtrend, lower highs, lower lows. And we don't want to see that go on for too much longer, because then obviously the next levels down are these current lows right there. That's at 27,700. So the good news is we got a good bounce out of that low, took the stops out at this stage, and we want to see that nice close above the 29.8 and more likely around that $30,000 level before we can tackle 31. So the crypto investors, the DCAers, are really not doing themselves any sort of favor. This is what we've been looking at for months, and of course more recently over the last few weeks. So make sure you're subscribed so you get the updates, understanding the difference between dollar cost averaging into a crypto when there is less risk and dollar cost averaging into those cryptos when the risk is so high. There's nothing wrong with dollar cost averaging if that's part of your plan, but it's just about being aware of what's going on in the market. And right now, I think it's Bitcoin season. It's been Bitcoin season for the last few weeks. You can see that these lows were put in here at around 41%. So this is the dominance, how much share Bitcoin has of the total market cap. And this has been increasing. So 41%, we're now up to 46%. The next levels up at our 50% level are at 56% dominance of the whole market. So Bitcoin would basically take back over half of the total market cap. But before it can get to that, it obviously has these other highs to contend with. And those highs are sitting around that 47 to 49% dominance. So we're starting to get there now. I dare say we might see a little bit of a pause once we get to 47 and a half. And that would then, the money would then flow out probably into fiat or into stable coins, which would then rise that crypto market up, which is your total 3. So this might start to rise up a little bit more, meaning that the money is just holding off on Bitcoin a little bit as it's hitting some resistance, and then the money needs to go somewhere else. So whether that's fiat, people are taking profits from their Bitcoin, or they start to gamble a little bit on altcoins. But it doesn't look like they're ready to gamble on altcoins yet. This is the massive risk. I just see it as a dangerous sort of play in this market when Bitcoin is showing the strength. This is not just my opinion. It's not, it's basically fact of the chart, because Bitcoin has had a shakeout crash and bounced back. But you can see that a lot of altcoins are still down against their Bitcoin value. So their dollar value is maybe even or still a little bit under, but their BTC value is still getting crushed overall. And that is because people are risk off, they're throwing it into Bitcoin, and that is showing up again on total 3, which is all of the market caps minus Bitcoin and minus ETH. And we looked at a potential of where this low could come in. So we have 2 data points at the moment that we're looking for, 2 resistance levels. One is the Bitcoin dominance chart. The other is the low on total 3. So total 3 is currently sitting at 430 billion. So that's basically all of your other altcoins. This is the value of all these altcoins. Now, it hasn't had a strong bounce from these lows. These lows are at 390, 400 billion, and the bounce has been very, very weak. So in the short term, I still think while we continue to hold up above the low here at 390 billion, we do have the potential to bounce from that point, and then some money flow into stable coins, into altcoins, and that will just suck in all of the dumb money, unfortunately, into those altcoins again before we go on another leg down to some lower levels. Altcoins tend to do 90% thereabouts or more when they come off, especially from major highs. And I don't think it's going to be any different this time, even if we do see a little bounce back from where we currently are at 430 billion up to 500 or 600 billion. I don't think that's going to be what is going to save altcoins just yet. Their time will come, but I don't think it's just yet. And so looking to the downside from where altcoins can drop to from the current point of 430 billion, I'm still searching for this area of support. So this is where the altcoin market took off before we went into those 2 major altcoin seasons of 2021. So that first one went all the way up into May, dumped again, and then we had another one that went into about November. So I'm looking back to this period where they started to really take off. So that was late 2020, December, and then into January. And so that would bring us down at a 50% loss, probably I'd say best case scenario, a 50% loss from the current prices. So genuinely speaking, it's not going to be every single crypto exactly 50% down. Some are going to do more, some are going to do less. That's just how it's going to average out in terms of the overall total 3, the market caps of all the altcoins. But I dare say it's probably going to be somewhere around these levels at the lows. To the lows would be about 70% down, and to those highs is about 50% down. Now, if it's going to keep going right to those bottoms to give us 90% off from the all-time high, so think about all the altcoins dropping 90% from their all-time high down to one of these support levels that I've got here, the yellow line, that's going to still be about 70% from the current price. So I'll say it again, the dangerous dollar cost averaging method here for altcoins is that there is still the potential to lose 50 to 70% of that value because there has not been any sort of significant bounce. There's no accumulation range, which means there's no smart money buying these up yet. There's no breakout of an accumulation range. This is high risk. It's extremely dangerous in my opinion. That's what I'm looking at here. So we're going to keep looking at the total 3 to see where this bounces, where this low comes in. That's going to give me a good sign to start saying, well, it's not nowhere near as risky to dollar cost average into some of these cryptos now. The other thing is the dominance. So we just hit 46% while I'm recording this. So to the upside, like I mentioned, 48, 49% in terms of the dominance itself. Maybe we'll see a rejection there. That's going to be a critical level. If it can't get above that, then maybe the alts do get a little bit of a run on and we have to reassess. Maybe we get some invalidations. But at the moment, that's where I'm looking to this Bitcoin dominance. Of course, it's not going to go straight up to that point. I dare say we see some moves up and then rejections and then rallies, corrections up and down until we get up there. And then if we do break through the 48, 49%, I think we're probably running towards 50 is a round number. You've got 52, which is a little bit of a congestion here in April where Bitcoin topped out. And then all the way up to 56%, which is the halfway point. Now, if you look at 56%, the halfway point on the way down, pretty interesting where this market started to crash down from, because this was the top here for Bitcoin in and around mid-April. So the market did hold up at about that 51 to 52%. So that was Bitcoin's all-time high before it went on that last run in November. After that, this market, Bitcoin started to break down in its dominance, and that's where altcoins went on their final run into May, and then the whole show was over. We just went through this sideways trading range. So that's why I think this little area between 51 and around 52% is going to be significant, because that was the old peak of Bitcoin. The other thing is the fear and greed, still down at extreme fear, sitting at 12. This has been going on for quite some time now. So I'll do an update of the fear and greed plan on the channel as well, how much Bitcoin we've been buying at these lower levels. This is just Bitcoin, of course, and how that affects the plan, what the average price is, and then strategies in terms of selling out in case we do get that bounce, and we'll look at that. Thanks again to the sponsors. Maybe there's an exclusive giveaway. Bybit, link is in the top of the video description. 4 lucky winners, we get half an ETH each. So make sure you check that out. It is going to be drawn in about a week and a half, so make sure you get into that ASAP. Like and subscribe if you haven't already. And then, of course, check us out. Weekly group calls. Patreon link is in the top of the video description as well. Talking about this, of course, real estate, crypto portfolios, and what we're doing on a daily basis to make sure that we are not exposing ourselves to that crazy risk at this point in time in the markets. Everything is looking like we're just getting towards some sort of bottom, but I think it's still going to take another few months, which is what we've been looking at on the channel here since earlier this year and even December of 2021. Thanks once again, guys. I am here in Monaco for the weekend. The F1 is on. I'll let you know what it's like. I'll put some posts up on Instagram, so make sure you follow me over there if you want to check it out. And of course, Twitter as well. Use those official links in the video description. Do not get scammed out there. I only have one account on Instagram and one account on Twitter, so even if you don't want to follow too much, at least you've got the official link there so you're not talking to other scammers as well. I'm going to post some photos and stuff of what's going on this weekend here in Monaco. I'll see you guys at the next video. Until then, have more fun to get more done.